Hi, I'm Kevin Castaneda, and this is Kevin's Mindset, where we talk everything finance, investing, mindset, and productivity. And in this video, we're going to be talking about big tech and whether big tech is ever going to sell off, what's going on, why we continue to rally, and why it seems like we're never catching a break to buy at the dip on something like Google, Apple, Amazon, Facebook, etc. So we're going to be talking about all that in this video. So if you do enjoy, feel free to smash the like button and also subscribe if you do want to watch more of my content in the future. And I would very much appreciate all of that. Also, go ahead and sign up with Public down below if you want to get up to $70 of a stock of your choice just for signing up. Free money, so go get it. Now, let's get straight into the video. Okay, so big tech has been quite interesting as we've seen things like Google, Apple, Amazon. Well, actually, Amazon's the only one who's kind of like slipped off their highs, and that is because of their earnings, and Wall Street wasn't too enthused, investors weren't too enthused about Amazon's earnings, which caused a sell-off, which was actually worked out very well for myself as I bought the dip and it's going well now. However, with things like Apple just continues to rally. It goes down maybe $2-3 and then it hits a new 52-week high 2 weeks later, and then Google goes down the same tiny little bit, and then it just keeps rallying. And with that, we never get a real big dip. And same thing with Facebook, we've kind of just been hovering around that 260 to 275 range, and it's been going up, down, up, down, up, down. So that one's kind of more of a just like up in the air type of stock right now. However, we're kind of at this point now where it's like, okay, what is going to go on? Why are we rallying so high? Why is Apple at like 152? Why is Google about to break 3,000? Why are all these things going on? And how can we capitalize on them? Now, I think that the market is seeing all these fears around us. We're seeing, okay, we're at all-time highs for forward PE on big caps. We are looking at, okay, we might have fears with Delta, but that might impact recovery stocks more. So then big tech is like, oh, whatever, it impacts recovery. We're not recovery stocks. We benefit off this. So I think that's the problem. I think that people understand what happened last time in 2020 and what happened during the pandemic. We saw, okay, recovery stocks and all this crashed because of why? Because they lost a lot of business. And then who swept in and got a bunch of business? Big tech, just tech companies in general. So with that, investors are looking at this now and saying, okay, who cares if Delta's coming? You know, yeah, maybe it's bad, blah, blah, blah. But as an investor, you think, okay, maybe it'll be the same as last time. Money will flow into big tech, and big tech earnings will get pushed up and propped up even more than they already are. And that will cause an even more of a rise in the stock. And so that's what's causing a lot of this sentiment around big caps, around safe stocks. People want something that's safe because it's unprecedented times. We don't know what's going to happen. We don't know what the impacts of Delta will be on our economy. We don't know how the country is going to react. We don't know how bad it will get during the winter. So with that, people are looking either to go hit it big in something like an AMC, which just rallies all the time, or in some sort of like movement or momentum stock, or people are going towards something else, a safe place, something like a Google, a Amazon, a Facebook, Apple, something like that, a big cap with a lot of earnings that has consistent growth, that is very safe and seems to have proven themselves big brands, safe, loyal brands, and like very, very, very big things, right? And so with that, we're kind of at this turning point where it's like, okay, we should be seeing a drop. Like, why are we not seeing a drop? And then the reason we're not seeing a drop is because all these problems that we think are going on, Afghanistan, Delta, supply chain issues, all these things, the market's already pricing into the future that these things will eventually subside, and people are expecting them not to be as terrible as people expect, and people rather just be in the market as opposed to missing out on the market. And there's so much cash on hand, as we know, as we've looked at many reports from either the SEC or from the Fed, and we're seeing that banks have a lot of money, people in general have a lot of money, and just having all this cash, a lot of investors are seeing like, okay, people are still spending, people are still buying, people are still doing all these things. So why would you want to miss out on the market is kind of the sentiment that's going around. And it's kind of I feel like it's a slight FOMO, like people just don't want to miss out. People don't want to miss out on the potential there being a rally. And you know, the right for that, because we are seeing a rally. However, I think that eventually this will get a little overblown. I think it will become somewhat of a bull trap because we will eventually get to a point where we have really bad news, I think. And I'm still investing now. I'm still buying any dip that I see. I'm still enjoying watching my account go green. You know, I'm not a bearish investor. I'm honestly a pretty bullish investor. I think tech and innovation will push us further into the future, which will cause tech companies to retain earnings and expand their earnings in the future. However, I do understand that companies right now are a bit high in valuation. Companies right now are kind of going through this process of like changing and kind of evolving as a business. So we're gonna see what happens with all of this. I think that for now we are in this rally mode. I think maybe if we do get some worse and worse news that we might end up dipping slightly over time. I think it would be a slow bleed out. I don't think we're going to see any like 5, 10, 15% correction on the S&P anytime soon. I think we're going to see maybe a slow bleed out for little bits of time like we've seen in the past. And I'm excited maybe we get back to those March and April lows someday. And I would be super excited to buy even more at those prices. But for now, it's just looking for businesses that are a good valuation that I'm willing to pay for and see what's going on from there. So let me know what you think in the comment section down below. What do you think about all this craziness that's going on in the market? Do you find it amusing? Do you find it scary? Just let me know what you think in the comment section down below. Also, go ahead and smash that like button if you did enjoy this video and want to watch, and also subscribe if you want to watch more of my content in the future. I'll see you in the next one. This was Kev's Mindset.